Good morning, everybody. It's morning time in the US, afternoon in Europe, and good evening to those of you in Asia. Welcome to today's BPO Index webcast, which will present a review and analysis of BPO contract activity in Q3 2015, and will look beyond for the rest of the year. This includes the latest analyses of major BPO contract trends by service type, vendor, industry, and geography. Today's webcast will be presented by John Wilmot, NelsonHall's CEO. The main presentation will be about 40 minutes, and if we receive questions during the presentation, this will be followed by a brief Q&A session. You can enter questions at any time using the Q&A panel on your screen. If you're intending to tweet about the event, then please use hashtags NelsonHall and BPO Index. Just briefly a recap on NelsonHall. As you know, we're the leading BPO analyst firm committed to the delivery of insight and thought leadership in BPO worldwide. We help service buyers to optimize their sourcing strategies and suppliers to optimize their go-to-market strategy and to increase bid success. And we offer a comprehensive portfolio of vertical and horizontal BPO subscription services, delivering the most detailed analysis and insight into emerging BPO opportunities and critical success factors. Furthermore, through our speed-to-source methodology and neat sourcing tools, we can help organizations on the buy side save up to 50% of the time and resources traditionally associated with sourcing projects. To find out more about any of that, please get in touch at the email addresses shown throughout the presentation and on the final slide. And so I will now hand over to John for the main presentation, and I'll join you later for Q&A. Over to you, John.
Thank you very much, Paul. Good morning and afternoon and evening, ladies and gentlemen. Welcome to the October 2015 BPO Index webcast. So as previously, we're covering comparisons of BPO and ITO contract activity by geography, an analysis of the BPO contract activity by sector and process, some recent developments and slight change in the format on that one this time. I think look at some of the industry developments rather than just some of the more interesting contracts for a change. And then, as usual, a round up by looking at the BPO TCV market shares of the leading vendors. I'm going to, for most of this, we usually do a sort of 12-month rolling comparisons because we're already 3 months through the year, or even nearly 4 months through the year, which is pretty scary. For most of the slides in here, I'm going to stick to 9-month year-on-year comparisons. So really, sort of January to end September 2015 compared to the same period for 2014. Just the usual point on methodology is to remind everyone that the figures shown here are outsourcing contract TCV. So it's adding up the value of the contract awards, and for each contract award, it's their lifetime value. So if it's a 5-year contract, the value over the full 5 years, not for 1 year. This isn't revenue data. It's very different, and it's much lumpier than revenue data. What I will give a plug for is we've just updated the forecasts in our self-service marketing tool. And I was tempted to show you on this webcast, but we'll let you off on that one at the moment. But essentially, we've got a database which you can access self-service, covering 78 BPO service lines, 30 geographies, 33 industry sectors, and you can just dice and slice for market size and growth data and for vendor share data using basically any combination of BPO service line, geography and industry sector. It's worth anyone who's got access hasn't taken a look. I encourage you to take a look. It's really it's much faster and easier way of actually getting the precise market size and forecast and vendor share data you need than actually asking an analyst. Most of the time you can just pull it off yourself these days. So let's start with a view of the BPO and ITO contract activity overall to see how those levels of contract activity are changing globally and by geography, and how the BPO contract activity is progressing relative to the ITO contract activity. So this chart is actually a rolling 12 months one. So this compares outsourcing contract activity over the past 12 months up to end September 2015 in the right-hand column, with that for the previous 12 months ending September 2014 in the left-hand column. And the breakouts for anyone who's colourblind like me are ITO in green, BPO in yellow, and then combined ITO and BPO in blue. So overall outsourcing TCV over the last 12 months was up 5%. But there's quite a marked difference at the moment between levels of growth in ITO outsourcing TCV and BPO. So the ITO is showing a modest decline, down 6%, while BPO contract activity shows a significant increase, actually up 26% on that rolling 12-month period. However, within that 16.7 billion shown there for BPO TCV over the past 12 months, there was one major item. Now, I think major items are valid. We don't complain on the BPO side that when there are 1 billion cloud transformation IT outsourcing contracts. But I should point out that there's a major one-off item in here, which is a 10-year contract for learning BPO between Raytheon Professional Services and the US Air Force, and that's valued at 2 billion over 10 years. So there is if you're not in learning BPO, you might think that's a little bit of a one-off. Having said that, even if we excluded that 2 billion contract, we'd still get an 11% increase in BPO TCV over the latest 12-month period. And including the contract, BPO contract TCV accounted for 37% of outsourcing TCV over the past 12 months, which is exceeding that average over the past 5 years. Look for it to be around 33-34% usually. So what about the last 9 months? So if you move now into 9-month mode, so this chart does exactly the same thing as the previous one, but it's really looking at outsourcing contract TCV just in Q1 to Q3, comparing 2015 on the right with 2014 on the left. So the overall, when we go to just the last 9 months, then that's where we really start to get a polarization between changes in ITO TCV and BPO TCV. So the overall outsourcing TCV in the last 9 months was down 11%, but then it diverges totally between ITO and BPO, with the ITO down 27% this year, while the BPO is showing a growth of 31%. Again, and I'm getting a bit repetitive at those points, but for those of you saying, but we don't operate in learning BPO, as most of you probably don't, then the BPO TCV growth, even excluding that major learning BPO contract, is still plus 7%. So hopefully BPO is still going at a 7 to 10% type rate increase, and rather more if you say, well, actually all contracts are valid, let's keep the learning BPO in there. So the overall proportions then was that BPO contract activity accounted for 39% of outsourcing TCV in the first 9 months of this year. Without that Raytheon contract, the figure is 34%, which is exactly the average for the last 5 years. This chart then shows the breakdowns for BPO and ITO TCV by quarter over the past 18 months. And BPO TCV is actually fairly consistently doing better than you might have expected. It's actually increased year on year for 3 of the last 4 quarters. So there were year-on-year increases in Q4 2014, Q1 2015, and now Q3 2015. The one exception where the BPO TCV faltered and was down 11% year-on-year, was the second quarter of this year. Even then, it was against a background of pretty low reported outsourcing contract activity, and it still accounted for about 38% of the overall outsourcing TCV. So it was in line with the wider picture even then. However, having said that, BPO TCVs bounced back well in Q3 relative to Q2. As you can see, that year-on-year increase in BPO TCV in Q3 was quite significant. It's actually up 108% year-on-year if you include the Raytheon US Air Force contract, and up 25% for this last quarter, even if you exclude that contract. So heading in the right direction, either at reasonable growth or at massive growth, depending on your view on that particular contract. I haven't included the slide this time round. We usually show slides showing the seasonally adjusted comparisons. But the 5 billion in BPO TCV in Q3 2015 takes it 14% above the seasonal average for Q3 over the period 20 to 14, which was 4.4 billion. So that was the pattern of BPO TCV globally. Now let's look at the performance of BPO TCV by geography. And this slide, as usual, is broken down into three elements. So the table at the top shows the total outsourcing TCV for Q1 to Q3 for 2014 and 2015, broken down between North America, Europe. I've stopped calling the next row Asia Pacific because it isn't. It's Australia, New Zealand and Japan, and then emerging economies, and maybe they're not as emerging as they once were either. So it's really sort of rest of the world. So North America, Europe, mature Asia Pac in ANZ and Japan, and then rest of the world. And then the table bottom left does the breakdown for ITO TCV, and the table bottom right does it for BPO TCV. So two geographies show growth in BPO TCV in the first 9 months of 2015. North America and the emerging economies or rest of the world. However, in both these cases, although there was growth in BPO TCV, that was accompanied still by a significant decline in ITO TCV during the period. Europe and Australia, New Zealand and Japan were less encouraging, with declines in BPO TCV over the past 9 months. However, Q4 was strong in both those geographies last year, so if you want to cheat and take a rolling 12-month view, then actually on a rolling 12-month basis, there was growth in BPO TCV in both these geographies as well, on a 12-month basis. So if we look at how the graph is progressing for BPO TCV in North America and Europe in 2015. So we're 9 months into the year, so we can get an early indication of what the likely overall performance of BPO TCV in 2015 is going to be relative to 2014. This far in, barring major surprises, we ought to be reasonably be close. So including the Raytheon contract, BPO TCV in the first 3 quarters of 2015 is already 14% ahead of the total for the whole of 2014 for North America. So including this contract, we're currently looking at BPO TCV in North America in 2015 being approximately 40% higher than in 2014. Even excluding this contract, we still expect BPO TCV in North America to be higher in 2015 than in 2014, but probably up around 10% rather than 40%. On the same basis, and excluding seasonality effects, it does, however, look as though the BPO TCV in Europe will be down in 2015 relative to 2014, possibly by in excess of 10%. Having said that, globally, we expect to see a net increase in BPO TCV in 2015 relative to 2014. Again, excluding that one big contract, we're probably looking at an underlying increase for the end of the year in the range sort of 8 to 10%, and that sort of area. But be interesting to see in 1 quarter's time what's actually happened there. I probably picked the wrong quarter to do this, but although Europe's not having one of its better 9-month periods, we did on the last call, and we do get regular questions on which countries in Europe are performing most strongly. Now let's take a look at the breakdown of BPO TCV by country in continental Europe, and also the corresponding service line breakdowns. I've been less brave than on the earlier slides, on the earlier one, because the data is even more lumpy when you take it down to continental Europe. Rather than just showing the contract data for the first 9 months of 2015, we've expanded it to all of 2014 and 2015. So the data here is based on 21 months of contract data. Nonetheless, the continental European accounted for 25% of the European BPO TCV in the first 9 months of this year, which was slightly up on about the 23% that it was in 2014. So you can see the region breakdown that I've put on the left-hand side here. So in terms of regions, Benelux leads the way. When I say Benelux, you can see from there that the vast majority of that is the Netherlands. And here, Infosys has been building on its contract with Philips to extend its F&A services into the high-tech and chemical sectors, and also more recently into insurance BPO. And Accenture has also got a recent contract covering F&A and procurement outsourcing. So quite a lot of relatively F&A centric plus a little bit of insurance BPO there in the Netherlands. Now, while BPO emphasis is heavily manufacturing centric in the Netherlands, there's a wider emphasis in the Nordics across financial services, telecoms and media, and manufacturing. Similarly, the service line spread is broader in the Nordics. So here, Capgemini is particularly prominent in F&A BPO, followed by Cognizant, Accenture, and Genpact. And Sitel is doing pretty well in customer management services. But there's a wider spread across front office, F&A, and industry specific within that Nordics region. And as you'd probably expect, for Switzerland, the financial services sector is the principal sector for BPO, followed by the manufacturing sector. So that's a quick run through on continental Europe. I'll do it on the rest of the world in terms of pulling out the other countries and some of the key indications of service lines on the next one round. I think the key message, and most of you are in the supply community will have known it for a long time, that F&A outsourcing is pretty important in continental Europe. And you can see there over the last 21 months, it's accounted for 21% of the contract value. There's also a significant amount of multi-process back office coming through, which is contracts which are typically combinations of F&A and HR outsourcing, occasionally combinations of F&A and procurement and sourcing outsourcing. And then after that, of course, there's the customer management services, the contact center area, but quite a lot, again, quite a big amount of industry-specific BPO. The difference really in continental Europe relative to either the US or the UK is that industry-specific, doesn't include government activity. It's predominantly led by the financial services industry, whereas in our main 2 geographies, it's always been quite a strong combination, a strong mix in industry-specific between government and financial services. So that's covered the BPO contract activity overall and by geography. Let's now take a look at BPO TCV by industry sector and process. So again, if we get out of continental Europe, go back to the global view, then you can see governments at the top. And even if we take the 2 billion contract off, government is still at the top. So overall, over the last 9 months, government and financial services continue to dominate BPO TCV, 68% of the global contract value over the past 9 months. Now, globally, there was broad-based growth in BPO TCV in the majority, 4 out of the 6 of the major sectors this year. So BPO TCV grew in government, in financial services, in healthcare, and in telecoms and media. The key sectors showing a fall-off in BPO TCV were the manufacturing and retail sectors, though the retail sector did show BPO TCV growth just in North America. BPO TCV growth in these sectors, as you can see, was strongly led out of North America, with broad-based TCV growth across all the major sectors, with the exception of the retail sector. No, there is some retail sector. Sorry, my notes are wrong, with the exception of the manufacturing sector in North America. In Europe, on the other hand, there are only 2 sectors to show BPO TCV growth, and that was healthcare and transportation. In the European healthcare sector, there's been significant activity in primary care, with Capita being selected to provide administrative support functions for primary care by NHS England. In North America, the healthcare activity continues to be more diverse, but we have here seen quite a significant uptick in levels of customer management services in US healthcare, followed by supply chain and clinical services. BPO TCV in financial services in 2015 increased broadly across capital markets, property and casualty, retail banking, and life insurance. Having said that, approximately 80% of the BPO TCV this year came out of capital markets and property and casualty insurance. We now just take a look at that overall split between the commercial sector and the government sector. The large learning BPO contract in the defence sector has taken the BPO TCV in the government sector beyond its value for the whole of 2014 already. So it's already beaten last year's total. Without this contract, and given a slightly reduced level of BPO activity in the UK government sector this year, then the level of government BPO would be slightly down this year relative to last year. So you can either have it slightly down without learning BPO, or significantly up and already beating its target with learning BPO. However, despite that major contract award in the government sector, the commercial sector is still in the lead overall, and BPO TCV in the commercial sector in 2015 is definitely on target to exceed that in 2014. So let's switch to a view of BPO TCV by process group. Here there's been growth in the first 3 quarters of 2015 across industry-specific BPO and back-office BPO. Within industry-specific BPO, the principal areas that increased were really banking and centred towards capital markets, although retail was in there as well. So the main areas that grew in the banking sector were securities processing, fund administration, and then payment processing. So those are all areas of industry-specific growth this year. Elsewhere, outside the financial services sector, there was an increase in supply chain management in industry-specific BPO, not only in the manufacturing and retail sectors, but also in media and defence, with Avato and Infosys prominent in this area. What may be more of a surprise was actually the industry split that we found for the first 9 months of this year in terms of customer management services contract activity. Probably for the first time that I can remember, the telecoms and media sector no longer dominated in 2015, but was pushed into second place by the financial services sector. So, but banking and so on, it's always been a sort of second sector in CMS. They're really starting to get to grips with it these days. With customer management services activity also strong in manufacturing and healthcare sectors. And again, the US healthcare, we've seen an increase in CMS activity there as well. So which areas of BPO strengthened in contract TCV over the past 12 months? At the global level, we've just seen the strengthening was in industry-specific BPO, HR outsourcing, and in multi-process back office. In North America, the strengthening was primarily in industry-specific BPO and in customer management services. In Europe, the increased activity was in multi-process back office and in HR outsourcing. At multi-process back office, we'd already mentioned that in continental Europe, we're seeing combined F&A and HR BPO contracts and combined F&A and procurement outsourcing services in the commercial sector. Another significant chunk, or another very significant chunk of that multi-process back office area was the UK health sector, particularly in terms of supporting primary care. So that's the patterns of BPO contract activity, and we'll come back to looking at some of the vendor shares in a minute or two. What I wanted to do now was really talk about some of the developments in BPO and really move away from the contract side to some of the more significant developments that are going on. So I've recently spent a week in India, and I think there are really only two things that people wanted to talk to me about. So, visiting a lot of the major suppliers, the main topics of interest from their side were certainly robotics, process automation, and analytics, and that was discussed everywhere. The third theme really being BPaaS, so platform-based BPO services, typically targeting very specific pain points. So if we look at what's going on in the supplier community right now, at one level in the mature contracts, whether they be industry specific in insurance, whether they be F&A in the back office, probably less so in HR and to a certain extent in customer service, then RPA is coming in there, as a replacement for the traditional macros and tools, and as a way of getting at some of the joins in processes that were too expensive or too difficult to automate previously. So much simpler way of actually putting macros and tools in there across the board. People are also building process models much more integrated with analytics and systems of engagement and robotics. So, and this is really moving again to that specific pain point. So, let's leave the system of record, the major ERP, the major core banking system as it is. But what platform can we put around that to actually work in conjunction with it, supplemented by analytics and so on, to actually address a particular pain point. So I'm seeing an awful lot of those packaged ones coming out. So I think, most people I talk to these days have a BPaaS type solution around the mortgage, whether it's just mortgage originations or mortgage processing more generally. There's a lot of activity there. There's a lot of activity staying with the banking sector in the Know Your Customer KYC and anti-money laundering type areas as well. There's a lot of stuff coming into insurance in various as well. But again, not replacing the overall process, but actually tackling particular pain points within it. So big theme on that. Alongside that, there is a move to a certain extent to people are building their own systems of engagement or acquiring systems of engagement to do that. So whilst third-party platforms are still important, proprietary is starting to replace some of those and come through more. I should add talking at BPaaS as well. Again, while BPaaS is unlikely to be a full F&A service, there's a lot of packaged stuff around the accounts payable type areas and so on at the moment. So, a number of people already have BPaaS parts of F&A. And the analytics starting to come in to be much more predictive and to build in process learning. Now, having said that, I don't think there are huge numbers of those contracts actually out there, and they certainly aren't dominating those figures. But they are the increasing go-to-market approach or main way of getting customer interest for most of the vendors out there right now. We talked a certain amount about finance and accounting earlier, so really wanted to look at how some of the RPA, the robotics type tools, are applying to finance and accounting. Now, again, it's not a across-the-board play. It's really aimed at very specific sort of sub-processors. And I've listed some of those down the bottom. So, even within P2P, supplier management, catalog management, three-way matching, reconciliations, cash application, reconciliation in O2C, useful for reporting in R2R, easing into company accounting, where it's fairly simply rules-based. And put some of the examples in. So, on a fair chunk of that, you can probably take out, let's say, 20 to 50% at that sort of sub-process level. Now, clearly, it's not worth doing it where it's a small number of FTEs. So, this is all really helps, if the processes are relatively clean to start with, but certainly the existing F&A BPO contracts, certainly where the second, third generation, tend to have been cleaned up pretty well, and you've got something to go at, and you've got a chance of taking a decent chunk of cost out at a sub-process level. So really to give you some sort of figure, and I think the sorts of numbers we were coming down to, and this seems to be everyone's racing to apply this, certainly in areas like F&A, be the same in industry specific, certainly in the insurance space, for example, is it's probably about a 3-year dash as far as I can tell at the moment, certainly in terms of that first wave of RPA product. And we're probably looking, certainly around, say, the F&A side, of taking about 20% of the cost out over that 3-year hit. But even those people who are fairly late into RPA are now starting to go for it. It generates some interesting questions there. So what about the commercials? Because I guess we have lots of conversations with our buy-side clients who say, I was promised this level of productivity, I never quite got it, how do I get there? And I probably could get there if I automated some of this stuff, but who pays for the automation? That requires investment on my side, and I don't feel I should be doing that. So RPA, again, raises this question, because clearly some money needs to be spent on putting it in. Also, before you undertake a project, you by and large, still at this stage, you don't know quite what the return's going to be. Now, the vendor clearly doesn't want to stay on FTE-based pricing if you're going to be taking 20% of the FTEs out over a year or two. So really, what are the possibilities in terms of doing that? Whether you move to more fixed price or transactional pricing, or whether you, on the fixed price, you just say, here's the productivity target. You guys use robotics, and just it's a tool you use to hit that goal, and so on. The other way, and certainly if you're still on FTE based, is to actually run each RPA project as a separate gain share. But maybe the simple way is just to agree productivity goals that take that into account, and just say, we'll pay a fixed price, and it's got these levels of productivity in there, and then work out how you do penalties or rewards around it not hitting those. There's still the question in there as to who pays for the RPA license. So again, should the vendor pay for it within a agreed productivity target and a fixed price, or do you stay FGE, you pay for the licenses, and then you do gain share downstream? So I don't think the commercial models have quite settled down into anything definitive yet, but there are those sorts of main options going there. And clearly, as the BPaaS tends to come in, then it tends to lend itself to more transactional or per output pricing of some kind. Okay, so that's really a total aside. Let's go back to the BPO contract activity and look at the market shares for the leading vendors. And I'm going to make another request for participation at this point. Clearly, not all BPO contract activity is reported, and so this exercise is of necessity a sampling exercise, and certainly not every client wants their contract to be known. However, I'd like to ask any vendors on the call to help us fill in the gaps and provide some guidance quarterly on your contract signing activity. We don't need the customer names to be disclosed, but indications of industry sector, geography, service type, range of contract value for those signed in the past quarter really helps us improve the accuracy of this overall picture. So, great to do that if you possibly can. Okay, so turning back to the market shares and who's had a good 9 months. I guess the first comment, looking at this chart, it's been a good year to do training for the US government. While not all their BPO TCV has been derived from this, both Raytheon and SAIC owe a lot of their positioning in this chart to government training contracts, largely in the defence sector. So that's I guess the simplistic point over at the end of that. The government sector was also highly important to Capita, hasn't it always been, accounting across a mixture of local and central government for just over 50% of their BPO TCV this year. What's interesting then, and a lot of this has been switching to certainly financial services sector and CMS and so on, but from the contracts that we've seen so far this year, another 40% of their BPO TCV actually came from healthcare this year. So that healthcare sector has been doing well. If we go down below State Street, clearly that's really in support of the capitals markets area. Then Capgemini's BPO contract activity predictably came from a mixture of F&A BPO, supply chain management and procurement BPO contracts. And they do seem to be, another trend within this is increasingly looking for to combine ITO and BPO contracts where you can. So actually trying to, I guess in Capgemini's words, do F&A BPO as a stack and get more of the application management and some of the hosting where you can. And certainly there are some trends towards that happening. Right, so in conclusion, BPO TCV in the first 3 quarters of 2015 was up 31% on last year. And really then just to show that picture, BPO TCV increased year on year for 3 of the last 4 quarters. So it's had a quarter of up 6%, up 12%, up 108%, or up 25% if you're being mean about Raytheon's contract, and then compensated by one quarter where it was down 11%. I think our global expectation based on that is that the global BPO contract TCV will increase by around 10% for the full 2015. What is probably good, but is slightly surprising, is perhaps North America has actually, not surprising that North America has recovered strongly. Europe is a little bit flat, and so I think it's fairly safe to say that North America is going to beat Europe in terms of BPO TCV for the first time in 5 years, and probably beat it by quite a margin. I think there's some confidence in saying that, in that it's not based on growth in 1 or 2 sectors. So the government, financial services, telecoms and media, healthcare and retail sectors all showing TCV growth in North America. The manufacturing side, and maybe some of the F&A in the manufacturing side, is down a little bit at the moment. But I guess there are always big renewals on that side to come in. The industry specific is also growing, particularly in capital markets and in supply chain management, as is the multi-process back office in Europe. And that, again, that multi-process back office is the traditional stuff of, it's probably F&A led, but then into HR or into procurement in continental Europe, whereas a lot of it is healthcare, multi-process back office in the UK. And public healthcare showing quite a strong burst of activity in the UK at the present moment. So, Paul, I think that puts us about on time. So if I can hand over to yourself for questions, and just remind people that if you want the revenue view, we've got it there as well, and it's fairly easy to access. So I'll carry on with my plug for that, plus any suppliers. Appreciate you working with Paul to help us in refining the contract data.
Great, thanks, John. There are just 2 outstanding questions at this time. The first one is really a definitional type question, and that is, can you clarify, is the regional activity that you show representing where the BPO activity is generated from, or where the BPO activity is performed?
It's where it's generated from. So it's where the customer is buying.
Great. Okay. Hope that.
And that I probably should point out again. That differs from a revenue view. So the revenue view is where the service was supplied to a certain extent, whereas the BPO contract view tends to be the single point it was purchased. So every one of these contracts gets allocated to an individual country rather than spread across countries as you would do with revenue allocation. And so it all goes to one country, which is the one we see as the primary buying point.
Thanks. Another question's come in, and that's actually related to the second question I referred to earlier. So the next 2 questions, and I think the final questions, are related to RPA, perhaps no surprise. The first one asks, Do you have a feel for how many BPO contracts actually include robotics as a component?
I can do that offline because yes, I think I do. And again, probably zilch in terms of startup. It's really, being put in as a necessity on renewal and pre-renewal. So it's really going in there. I mean, most of the contracts it's being applied to are not, if you like, new contracts or even new contract renewals. It's going in almost alongside the existing contract. But it's quite a big number because, clearly, if you're in a service area that's particularly applicable to this, then, most people are seeing that they need to do it before someone else makes the offer.
Great, thanks. And what looks like the final question for today is, are vendors using third-party tools for RPA or proprietary?
Predominantly third-party. I can only think of one vendor that's using proprietary. The rest are all using the usual third-party tools. So, the sort of automation anywhere and IP soft and things like that.
Okay, that's great. And I think that concludes the questions for today. So thanks very much, everybody, for your participation. If you have any additional questions, please don't hesitate to drop me, Paul Connolly, a line, or John on the emails shown on the final slide. And let me just summarize by saying that today's Index webcast is highlighted recent developments in TCV, but it's really just a small part of what we do, and clients can benefit from a whole host of different programs and activities across the BPO space, including comprehensive market analyses, supplier assessments, and much more. Not the least of which, of course, is direct access to our expert BPO analysts. To find out more about any of that, please do get in touch. And just to reiterate what John mentioned earlier, we have an extremely powerful self-service market forecasting tool, which we've just updated. It's incredibly powerful. If you haven't used it and you're a client, please get in touch with your account manager, get in touch with me, and we can give you a demo and point you in the right direction. If you'd like to find out more about that and you're not a client, then get in touch anyway. So anyway, great to have you on board today, and we'll meet again in a quarter's time. And thank you very much for your participation, and good day.